What's up, traders, and welcome to a new video. This is going to be part of a weekly series where every single Sunday I'm going to drop a video at 6 p.m. Eastern discussing recent market news, what's happening in financial markets, looking at different stock tickers. We're going to go into technical analysis, fundamental analysis, just anything and everything. We're going to cover it here in this series, and I really think you'll enjoy it, so make sure you hit that subscribe button. If you have any questions about anything here in the video today, drop a comment. I'll try to get to you as soon as I can. Without further ado, let's hop into the video. I'm going to give you guys a lot of different things to look at in this video. But first, I wanted to just put it past you. If you don't already have a place to look at stock charts and analyze and identify different patterns, then I highly recommend tradingview.com. It's completely free. You can sign up with an email. You can build out watch lists. There's a bunch of different tools on the right here, like you can set alerts. There's news. You can look at the economic calendar. Really, there's a lot of functionality built in here. And then on the left, of course, you have all your different drawing tools to help you make sense of what's actually happening on price. There's different indicators. Really, anything and everything is through TradingView. Not only can you look at stocks, there's futures, forex, crypto, indices, bonds, and often overlooked is this economy tab. And if you search and filter by specific countries, so the USA, you can look at the federal funds rate. You can see it's been ticking up over time. The federal funds rate was 19%, and if we compare that to USA inflation, you can see that they raised rates to help deal with high inflation at the time, and ultimately were able to bring it back down once they raised rates to 19%. Do I think that we're going to raise rates to 19%? I'm not sure. Only time will tell. They did it in the 80s. Maybe Jerome Powell has something else up his sleeve, right? So highly recommend just playing around in TradingView if you haven't already. Let's first start off with the S&P 500 ETF. SPY is the ticker. You can see here on every single chart, I do have a default gray line, which shows the high and the low. So here's the high, here's the low. And if I zoom in and out on that time frame, you'll actually see the gray line move there. The orange line is the 52-week low and the 52-week high. And I have an alert currently set here with the thicker dotted orange line at 20% from previous highs. So that's a technical bear market line that I like to have here. It's more of a psychological thing that investors look for. Even back here, if you zoom out to that 2018, SPY dropped 20% before the Fed changed stance and the market ripped higher. So that's just like something that I like to look for on all the indices that I track. One cool thing that I'd recommend, though, is getting familiar with the different hotkeys. So Alt-T is a trend line to see how price is moving over time. This is what I usually look at first. So you can see here we've been in this downtrend, and it's tested this line a few times. Even in their most recent rally, it came up here, tested it, and then rejected. So, if you were looking at this and price was here and it was in the middle of July, you could have an idea that maybe price is going to come back up here and test that line. You can, in TradingView, you can favorite different positions. So say I wanted to go short. If it hit that line, it'll add it to this toolbar. I can click that line, set a stop loss if it continues higher and breaks out. So if it moves up to 441, I'll cancel, exit out of my position. And then I could put the target back down to this 20% line. And you can see the risk to reward ratio here as well on 11% move. So overall, it's a really intuitive tool that you can use. I do think we're actually going to go and retest this 20% line, which can get more into detail as well. I have here, so if I'm looking at QQQ, which is the NASDAQ tech ETF, let me just clean this up a little bit. You can see here it actually broke above this line for a period of time and then dropped back down below it, which is really bearish because you have a false breakout to the upside. It's a bull trap, and then it broke back down below, and we might actually go back down and retest this $270 line, which is where we found support back here in August of 2020 and November of 2020. And really, a good idea to do on your chart is look for highs and lows over periods of time. A lot of people will look at volume profile, which you can actually add as well on TradingView or Thinkorswim or some of the other platforms to see where really supply and demand zones are. So a demand zone is where buyers come in, they think it's at a great value, they purchase the stock or ETF, price trends higher into a supply zone, like up here at 407. This would be a supply zone. If price ever moved back up here, sellers might start to come in and price will move back down. So that's what I like to look at next. So how is price moving over time, and then look at different levels. Let's take a look at some good setups that I think are currently happening in the market. So here's Tesla, and you can see here if I drew a trend line, it's come up here and tested this line twice already as it is. It's right now kind of in the middle. So if price were to come back up and test this line, I could do the same thing. I would set up a short position. You know, if it gets up here, it might move around a little bit, right, depending on actually when it comes up and tests this line. But you could set the stop loss shortly right up above it, just depending on your time frame, and then select an option or a put option or a put spread to the downside, and it would likely target, right? So this is really where it comes in. The extended target I would always have is, you know, where it found support before at 208. So that's very likely. But, you know, if it comes up, hits this level, this is a huge swing to the downside. But more than likely, you could also look at, well, maybe it'll just come back down to this 280 level, right? So from 340 to 280, that would be a decent position. But really, we're just looking to see if it breaks about above or below this range that it's currently trading in, whether you want to go short or long. You know, if it breaks back down here, then you could even go short sooner. So these are all decent positions, decent trading setups. If it does break and get the close below this level at 270, 279, 280, then it's probably going to travel back down to 208. And it looks like it's just going to be trading in this range for quite some time. So that's something to look for. Another good one is Zoom. So I don't really like this company. However, they do have a decent business model, but there's a lot of competition in this space. But Zoom has been, obviously, during COVID, it was just ripping to the upside. Everyone was working from home. Everyone was talking to each other over video chat. So Zoom did really, really well. But once everything reopened up, it's just absolutely got destroyed over time. It's now trading at $81. At one point, it was all the way up to almost $600. And you can see here, this is something that actually happens with a lot of meme stocks, but it's going to travel a bit lower into this $59 range, which is a great position to actually go long. So even though I'm not a bull on this stock, I don't think it's going to do all too well. I would like to have an idea that price is probably going to go higher once it hits this $60 level, and it could travel back up to $80. $60 to $80 is $20. That's a 33% gain. So if price goes there, you can time it on some weekly call options, 2 weeks, 3 weeks, see if you can get a really nice bounce to the upside back to $80. That's probably like where I would have my target. So the target would be around $80. So that's actually a pretty big swing, and you can see a risk-reward ratio. There's just a bunch of different things you can look at. It really depends on what position you're in and what the expiration of your contract is. So Zoom's also a really good one that I'd like to go long around 60, either in shares or call options for a few months out just to catch that bounce. Costco is another one that we're talking about in my Discord quite a bit. This one is a 43.38 price to earnings ratio. To give you an idea, if you looked at Walmart, it's a 27. If you look at BJ's Wholesale Club, that's a 20 price to earnings ratio down here on the right. So there's some stats that I like to look at. Price to earnings really is a focus on, what am I willing to pay for $1 of earnings? And obviously for growth stocks, like say Tesla, for instance, a price to earnings ratio of $107, I'm going to pay $107 for $1 in earnings. what I'm really paying for is growth. What are the growth prospects of this company? When you look at Costco and other consumer staple companies, is it really going to grow to justify paying $43 when I could just buy a Walmart, I could buy Target, some of these other, consumer staple companies? It doesn't really make sense. So I do think Costco, from a fundamental perspective, is extremely overvalued and will trend lower over time. Another cool thing is all these uptrends get invalidated at some point and break below, and that's what happened here with Costco. It broke below 515 on this uptrend, and then it absolutely got slaughtered down to 406. Now, I do think price could be in this like head and shoulders type movement if you're really into different patterns on the technical analysis side of things. If you hit Control Z, you can undo that. What I think really is, this is a supply zone here. Hold on a second. Let me move this line a little bit higher. So it kind of came up into this supply zone and even retested this uptrend line and rejected so far. I would really like to see it come back and retest this 482 to 465 level. I really do think that's a high probability chance in the next few months, and that's what I'm playing to the downside. Price could go higher, but you can see here when Costco does sell, it does sell hard and fast. So I'm really thinking that over time, here it over 2 months it went up 27%, and then just shortly thereafter, over about a month, it dropped 20%. And I think you can actually do price and range. So you can see here over 72 days, it went up 30%. And then over 47 days or 32 bars, 32 trading days, it went down 33%. And so I'm kind of thinking it's probably going to end up doing the same. You'll probably have a sharp correction downwards on Costco. So that's another thing that I'm looking for. I guess we'll finish here with Bitcoin. I do think crypto is a terrible asset to own as the Fed continues to do quantitative tightening, which is running off the balance sheet or shrinking the money supply. Bitcoin and all cryptocurrency runs on liquidity. Its only information is price. What is someone willing to pay for it? It doesn't actually have like a stock. It doesn't have earnings. It's not a company. It doesn't pay out dividends. It doesn't produce any income. It's just, is someone willing to pay it more than what I bought it for? And that's really all that crypto has to stand on. And so you can see here, as the Fed started tapering rate hikes, you've had it hit $69,000, and since then it's just been bear flag after bear flag. If I drew this out, you can see there's a bear flag, there's another bear flag, another bear flag, and then it just broke down below another one. I do think it's going to come down and target this $14,000 level, which is, if you go all the way back to June of 2019, that's where it topped out. But if it trades back down into this range, it could go all the way back down to 4,000. So that's something to watch out for. And as long as the Fed is raising rates, people are going to be moving their money into income producing assets like bonds or other assets, real estate, things of that nature. Anything that actually produces a return on their money. And so I would highly recommend staying away from cryptocurrencies. Another cool thing that I'll probably get into in the next video for next week is what we have here is a fundamental way of looking at this is a master list. So it has all these different companies, and then inside of this model, at the current moment, we have Apple and Facebook, but it'll have a link to another Google sheet that has a full built out model. And you can see here, there's like a DCF valuation. On the upside cases, Apple's worth $160 based on these growth assumptions that you see here for all these projected years. The base case, it's worth $114, which is a 42% discount to the current share price. So I think this is really useful. You can check out our Discord if you want to sign up and have access to this model. I think it's really useful. But that's it for this video. I do think, if I was just going to give you an idea, I think price over time for the next month and a half is going to go lower. The Fed is actually increasing quantitative tightening twofold beginning September 1st. Quarterly OPEX is coming up. September futures roll is coming up. CPI data is coming up. A lot of stuff is happening in Europe with electricity. I don't know if oil is completely done yet. It's just really a lot to tell. So really a lot of unknown variables moving around, and we'll see how price moves here in the next upcoming weeks. So stay tuned. Make sure you hit that subscribe button, and I'll see you next week. Have a good one.